Hi, my name is Eric Udvari, and I'm a wealth manager in our Boise, Idaho office. Indexing is a term that is thrown around a lot in the investment space. Admittedly, I forget that this is a finance term that not all investors fully grasp or understand. So what is an index fund? Let's spend a couple minutes breaking down what it actually is. I find the best way to describe an index fund is to think about it as if it is a basket of different investments. We all go to the grocery store and fill our baskets or carts with different foods: meat, veggies, fruit, snacks, and drinks. You cover all your needs that week with that basket of food. Much like that basket of food, investors can cover their needs by buying different baskets of investments. These are what we call index funds. The most widely used index or basket that streams across our news outlets is the S&P 500. Simply put, this basket measures the performance of the 500 largest U.S. companies. Historically, it's a great basket to measure how the U.S. stock market is doing year to year. It's also broad, encompassing all economic sectors, much like our weekly shopping carts filled with meats, veggies, fruits, snacks, and drinks. Index funds can also be more targeted. They can be sector specific. If we think back to your shopping cart, you might have multiple types of meat: chicken, beef, pork. We can think about that as a sector of the economy. And if it's a sector that we really like, we might buy more. Healthcare, technology, and energy are a couple of those sector-specific baskets that we can buy. The whole point of investing in these various baskets is to make sure, as investors, we cover all our needs to stay diversified. We need to have the right mix of these baskets to ensure that we're not taking on too much or too little risk based upon our specific goals. Index funds cover everything from U.S. stocks, international stocks, bonds, and real estate. Index funds can be a wonderful tool to incorporate into your investment toolkit, help stay tax efficient, and be cost conscious. Here at Howe & Rustling, we utilize a variety of investment strategies for clients. This includes index funds, individual stocks, and individual bonds. Indexing can be an easier, simpler path to achieving diversification for clients without significant assets. Also, it can be a great fit for clients who are more comfortable owning a handful of diversified funds in their account, with indirect exposure to underlying companies, as opposed to directly seeing the fluctuation of 40 to 50 individual companies themselves. Put another way, a person might simply prefer an indexed, bucketed approach to their investments. And that's a consideration we value here at Howe & Rustling. Every investor has different needs, objectives, and assets, so there tends to not be a one-size-fits-all approach to building an investment strategy for someone. As a certified financial planner, it is my role to help select the appropriate investments based upon your goals. Our team at Howe & Rustling is always happy to answer any questions that you may have on these investment topics. Thanks for tuning in, and we look forward to our next conversation.